Hello, investors. It's Don Vandenbord, Chief Investment Officer and Senior Portfolio Manager at Revere Asset Management. Today is Friday, July 2nd, 4:40 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida with The Big Show, the expanded edition of the Revere Market Insight video where we take a look back at the prior week, take a look ahead at what you need to know for next week, and update the leaders list, the world famous 21 over 21 list. That's 21 stocks trending above their 21-day exponential moving average, diversified by at least 10 sectors. We've got 12 sectors this week, 18 different industry groups, dominated by tech stocks, but a decent variety of stocks in there. And we'll get to that in a little bit. But first, let's take a look at the state of the market. Got a little bit of a bifurcation here in an uptrend for sure. NASDAQ 100, however, we talked about this on the podcast for this week, extended now 6.4% above its 50-day moving average. And historically, that is a level at which you would start to see a little bit of a pause in big cap tech. That's not saying it can't continue to trickle higher, but we go with an odds favor approach here at Revere Asset Management, and the odds favor that the NASDAQ 100 and big cap tech not continuing to slingshot higher. It does, and again, doesn't mean it can't. Odds favor. You're either going to go sideways for a little bit or pull back and let the indexes, specifically the short-term 21 and the medium-term 50-day moving average, catch up to that. Plenty of opportunities in other sectors, though, as the S&P 500, although it's at all-time highs, is not extended. So checking the trend gauge over here, we've got market leaders in an uptrend, and then the short and intermediate term. This means the 50-day for medium term, the 21-day for short term across the 5 major indexes. Yes, bullish in an uptrend, but there's your red light, and this really just applies to the NASDAQ 100. So a little bit of a caveat on what's going on with the uptrend. And long term, we're trending nicely above the 200-day moving average, as we have been for over 11 months now. So what just happened today? Mega cap tech dominates. That is an acronym for Microsoft, Amazon, Google, and Apple, as they were all up 2% or more today. That really was by far the dominant aspect of the market, and that carried the NASDAQ 100 to a 1.15% gain on the day. S&P 500, which of course is very tech heavy, up 0.75% on the day. We have a 25% position in SSO, which is the 2 times S&P 500. That was up 1.5% on the day. Dow Jones Industrial Average up 0.4. Mid caps and small caps lagged, and usually that means, and also you saw today, that means banks and oils lagged on the day. The KBE, that's the bank ETF, down 1%. XLE down 0.2%. XOP, that's Oil Explorers, down 1.8% on the day. In-house, we lagged the S&P 500 slightly today, as the leaders that we're in are putting in handles very nicely. They ran for a long time. They're taking a little bit of a pause, and this is really what you need. It's the pause, hopefully the pause that refreshes as they pull back to their 8 EMAs, and the 21 catches up to price action. So that's definitely what you want to see to propel leading stocks higher. So let's get to the charts now. Let's take a look very quickly at the guys running Revere. You've got President Dan, Chief Investment Strategist Tim, Analyst Hunter, Alex, and me, and you can contact any of us for more information on our approach to the markets. It's an active approach. We first evaluate the overall market, then the sectors, and then we break down to the strongest stocks within those sectors. And if you'd like more info, give us a shout. You can email any of us, Dan, Tim, Hunter, Alex, or Don at revereasset.com, or call 855-REAL-WEALTH. That's 855-732-5932. First, we'll check the major indexes, then we'll check the 11 spider sectors. So here you can see very clearly, let me blow this up a little bit. the S&P 500 all-time highs. False breakdown on 6/18 2 Fridays ago, and from false moves come fast moves in the opposite direction, and that's what you've seen here as we just continue to melt up, and this melt up has been led by big cap tech. Here's the NASDAQ 100. You can see the relative strength on it, really 1, 2, 3, 4 weeks now of relative strength since this gap down and close at the highs on 519. That's been an inflection point for tech. At this point, one test of the 50-day moving average, and then big relative strength move up over the last 4 weeks. These types of moves and relative strength like this do not persist for an extended period of time. So again, we're showing the caution here. Let me flash 3.4% above the 21, 6.4% above the 50-day. So that's your red light. You ultimately make your own decisions, but that means that we'll be limiting our exposure, our added exposure to those big cap tech names. Now we topped off some accounts with Apple today that had a little bit less than the allocation that we have. Apple's just coming to the top, just broke out of the top of a nice cup base, so it's really not that extended, but overall the NASDAQ 100 is. Let's go to the Dow Jones Industrial Average. And you can see here again, got very weak for 2 weeks, really just working sideways, staying in line with what the S&P 500 is doing as it approaches new highs. Let's look at MDY. This is mid caps. Hanging out just around the 50 and the 21-day moving average, underperforming a bit here, as you can see, over the last 4 weeks. And let's go to small caps, hanging right above the 21-day moving average at the top of this nice range. This is a 76-day long flat base that this has been, and it's only 11% deep. So that means top to bottom, just 11%. And if this blasts out of here higher, you could really take the market with it. And there's been some lagging relative strength over the last 4 weeks in small caps as money has, as I mentioned, flowed into big cap tech. But these strengths and weaknesses, you can see how they sometimes 3, 4, 5 weeks at a time, but they don't persist before you get a counter trend in the opposite direction. And sometimes that counter trend turns into a persistent trend. So as you can see here, relative strength, we had a strong trend higher, counter trend starting here at the beginning of March. Was it a counter trend? No, it continued lower, lower, lower. Now going sideways to lower over the last 5, 6 weeks. So that's what's going on with small caps. Let's take a look at what's going on with spider sectors. So this is how we know where to focus our money. Let's start out with XLB Basic Materials, who had a harsh sell-off after the Fed 2 weeks ago. This was an inflection point and continuing to show a lack of relative strength in basic materials. This is why we don't own any of these. We took a small position in NUE and CLF a couple of weeks ago, or last week, got stopped out very quickly as they didn't go anywhere. And basic materials, as I mentioned, continue to underperform on a relative basis. Let's look next at XLE Energy. Really seeing some volatility in their energy space, but relative strength making lower highs and lower lows. That's something we're keeping an eye on as it hangs out right around the 21-day. We've got one energy stock in our 21-21 list, which I'll look at momentarily. Let's go to XLC next. This is basic communications or communication services. That's at an all-time high. This includes Facebook and Google in it. Financials, XLF, also and got hit hard with this Fed decision 2.5 weeks ago, but it's rallied back since then. So reclaiming some of those gains, coming into the underside of its 21 and 50-day moving average. Goldman Sachs continues to really be the leading financial in the space. XLF. Let's go next to industrials, XLI. And again, those underperformed the day after that Fed meeting, bouncing back, but not bouncing back on a relative basis. So this is also into the 21 and the 50-day moving average. So if you just look at this, you think, hey, this is doing fine, but on a relative basis, it's not even keeping up with the S&P 500, as tech is really dominating the S&P 500 now. And speaking of tech, XLK is next on our list. And just like you saw with the NASDAQ 100, 4 or 5 weeks of very, very strong relative strength here, and now confirming, making new recent relative highs after lagging for a while for 3-4 weeks back here at the end of April. Just when you go to thinking that nobody wants them, all of a sudden everybody wants them, and I'm talking about the FANG type stocks there. So next, XLP. Usually when tech is leading, staples are lagging, and that's exactly what you're seeing here. Bounce on price basis, complete underperformance on a relative basis. We've got no staples in our 21-21 list. XLRE is next. That's real estate. Looking good again on a price basis, but not on a relative basis. And you're seeing a lot of this. Money, when it flowed out of tech and into the other sectors, it didn't really drag tech down that much. In fact, the big cap techs went basically sideways from September to April. And that money coming out of that huge percentage of the S&P really inflated a lot of the other sectors like materials, like financials, like energy. But now that money comes out of those, it doesn't take much to pull it out to impact these smaller sectors, and that's why you'll see them underperform on a relative basis, while price really is masking that. XLU is utilities, also big time underperformance on a relative basis, on a price basis too, as this is bouncing off its 200-day moving average, the only one of the 12 or the 11 major spider sectors that's anywhere near the 200-day moving average. And of course, we've got no utilities on the 21-21 list. We did have one real estate stock taking a step backwards, and I'll show you that momentarily. Healthcare XLV, all-time highs, just about keeping up with what's going on with the S&P 500, but this is a divergence. Note the price action here. Note the price action here, new high, relative on a relative basis, again, not making new highs, and that speaks again to the dominance that a big sector like tech can show. And again, that's why basically half of the 21-21 list is tech. We try to stay diversified by finding looking through the haystack for the needles, and they're there. You just have to look for them, but tech by far dominates the list. And here's consumer discretionary, new highs here, not quite on a relative basis. This is dominated by Amazon, which did break above the 3,500 level today. So that's it for the sectors. Let's get to the 21-over-21 list now. And first I'll show who got kicked off of the list last week. And we had 24 stocks in the list last week. I didn't cut it at 21 because I was having such a hard time deciding, and I didn't want to delay the video anymore. But SE, which we bought and got stopped out of below the 21, so that got kicked off. Zim, something else that we bought and got stopped out of, as that really came apart over the last couple of days. And Novacure, who had a disappointing phase 2 result with a big gap down and a big exodus from the 21-over-21 list. Okay, so let's show the whole list quickly. As I mentioned, 12 sectors, 18 different industry groups dominated by tech and retail. Here's your list. It's sorted by length of time that they've been on the list. So let's start cranking through this. We'll start off with 3D Systems, which we still have a position in after this big move up on 527% volume, up 27%. This is a highly shorted stock. You can see here, do I have it on this list? I don't, but the short percent, here it is, short interest, 15.4%. So shorts covering pretty much drove it up, went higher for a couple of days, pulling back now, actually broke below the 80 MA, but still 6% above the 21. And again, if something has a flag next to it or flagged up here, it means we own it in-house. I sold FANG this week as energy showed some weakness with the OPEC meeting going on. That ended up not being the best decision. As you can see, the pop-up on FANG on Thursday really outperformed most energy stocks that day, up 6% on big volume. Very nice tight inside day today going into the 3-day holiday. So that's FANG. Lulu, this continues to look good, going kind of sideways now. Need a little bit of digestion after this nice move up. Still not to the top of its base, but hopefully time to put in a handle here and turn this flat base into a cup and handle. Roku up next. We own this. 2-day pullback after a big day moving out. Huge volume here. Looking good. Roku hopefully putting in a handle. PayPal started its handle. You can see pattern recognition has picked it up. That means that it's longer than a week long in order to show on this chart. So PayPal looking pretty good. It's been on the list a couple weeks now. Avantor medical stock continues to make higher highs. Relative strength just fine. INMD relative strength just fine, pulling back to the 21. That's another medical stock. Retail Revolve. This continues to act extremely well. It's now 20% above the pivot. Just pull back and touch the ADMA and look at the relative strength line on that. That's a retail, really an internet retail stock. Elastic, a software stock, putting in a handle right below the 150 level. Viva Systems, first moved below the ADMA, but reclaimed it today as that continues to look good. Signet Jewelers, I guess after COVID, everybody's getting engaged and married, and you can see how this continues to ride the ADMA higher. Net Cloudflare broke out of its base, putting in a little bit of a higher handle now on extremely light volume this week, although light volume leading into 4th of July is very typical. Snapchat now nicely had trouble getting above the 64-65 level for 3 weeks. You can see once it broke above it and back tested that this has flipped to support. So this looks extremely good, and this is probably in my top 3 list as something to get into. CrowdStrike continues to put a nice handle in near the high here of the flat base. This is acting exactly the way you want it to, with volume drying up. DocuSign, same situation, big run up to the top of its base, pulled back now for 3 straight days, a little bit of a handle coming in here. ANET, networking stock, bounced off the 21 and with some gains the last 2 days. NVIDIA continues to just absolutely be a beast. Anytime it touches the 8, it bounces, keeps getting price target upgrades. Very clearly, this is the market leader at all-time highs. TMUS bounced off the 21 with a nice day today. AMT, this is the REIT that owns cell towers, bounced off the 21 a couple of times over the last couple of weeks. DPZ, Domino's Pizza delivering for shareholders, continuing to ride the ADMA up. FTNT, this is, if you're in it, this has been an extremely easy hold over the last 6-7 weeks, just really not even touching the 21 day. And that's going to wrap it. That's your 21 over 21 leaders list. Let's quickly check out the Dirty 30. Then we'll talk about what trades we made this week. And so here's the Dirty 30. I started out trying to find 30 stocks that were 30% or more off their highs as growth started to pull back. I keep finding more that weren't on the list and adding to it. It's up to 78 names now. What you really want to focus on is the ones that are off the percent off of their highs. Some of these will just never come back. If you get to the bottom of the list, you can still see QuantumScape continues to be the swirl around the toilet bowl here, as it's 80% off its all-time highs, along with Array, Desktop Metal, NNOX, AI, and Jumia. But let's take a look at the top 10 here, led by Dynatrace, all-time highs. Marvell, a seldom talked about semiconductor stock, but this thing is really keeping pace with NVIDIA over the last couple of weeks. Viva Systems, it's in the 2121 list, as is CrowdStrike, which we own. Net, which we own. DocuSign, which we own. Shopify, which is near the top of our buy list, as this puts in a really nice handle. And Snapchat, I also already mentioned that's in our top 3. Zscaler, really a sister stock to CrowdStrike, but just underperforming it by a bit. SE Limited, we got stopped on this and it broke to 21 this week. And finally, let's go with NTRA, putting in a handle. No, let's do one more because I like the way Upwork is acting as it gets to the top of its base. too. And what the heck, one more IIPR. This is the marijuana REIT, the cannabis REIT. Really putting in a nice base. This had a severe breakdown near the market top, and this is actually outperforming all of the cannabis stocks. We bought MSOS. I'll just segue into what we bought and sold this week. MSOS, as it bounced above the stacked moving averages here, the 8, the 21, and the 50, two closes above them, although a little bit of a down day on Friday. So MSOS is the newest position that we've taken. I talked about how I got stopped out of Zim this week. This one had a lot of promise, but when you just don't get married to the story. NTLA, I'd like to have this one back. This was gene editing announcement, had a big gap up. We got a position in it on day 2. It ran up on huge volume on the third day, was up over 30%. And it just gave it all back, and we ended up closing this out for single digits. Ideally, in hindsight, don't be greedy. Take the 20% gift, even if you don't have a large position in it, because volatile stocks like this will pump and dump, and this one certainly did. Also talked about SE, how we entered and exited that. We added. Let's see, I talked about these earlier in the video this week. CLF broke to 21. It's come back nicely this week, so that could be a basic material stock that's on the 21 list if the overall sector was acting better. Nucor also got stopped out on it. It has not come back, so CLF is the clear leader in that sector, and that's going to wrap it. As always, love to hear from you. Give me a shout. I'm on Twitter at @DVandenbord or email don@revereasset.com. Phone is 855-REAL-WEALTH, and Danny will answer that. And that's it. Wrapping up. The week ending July 2nd, markets closed Monday, July 5th. So I'll be back Tuesday with your video. And or maybe Hunter will do it. We'll haven't decided which one of us will do it yet, but we'll be back Tuesday regardless. Tim will have Wednesday's video, and that's going to end it for the week ending 7/2. This is Don Vandenbord telling it like it is. Thanks for listening, and enjoy your long weekend.